they lose the bonus because they produce extra amount. So then there is acquisition war. It's because of you, it's because of you, it's because of you. So a good manager, they must maintain or have a very close eye on these kind of activities, right? So you develop this kind of system like that. If order is coming and then you see that okay, it is a confirmed order or not, whether the customer paid some 20% as an advance or not. If it's a big order and there is no advance, plus we don't have already a good already or we don't have any business activity, previous business activity or history from that company before or that client before, then this order may looks fake, and then we forward that order to different checks, security checks, or it's an actual check or not, this kind of stuff. So we should develop this kind of stuff, right? Because ultimately cash is going to be disturbed. The question is here, it is related to marketing and the production, why it has to do with cash. Because when you produce, you give order to supplier, cash is involved, right? So that's why we also establish some kind of system in which we have a close watch on our cash as well. Control procedures. So it is built on control environment and information system both. So you have already control environment, you have good information system, but the authority who control all this stuff is very weak. You know that if I steal from the company, the maximum thing is that they're going to suspend me for 2 or 3 days or maybe 1 month, that's it. Because the others, our manager got this kind of stuff, and they just expelled him or suspended me for 1 week. So it's okay if I steal something, I can stay at home for 1 week, and after that I will apologize and join the company. It's not like that. So you must maintain the authority and control the procedure as well, so that everything is working fine, right? Plus you establish control, like different kind of technologies, thumb impression, camera system, motion detectors, this kind of stuff, right? So that everything is controlled. Once it is the exit time, or this work is closed, now even then there is a motion or there is an activity inside the factory or inside the head office. It means something is going on, and then the technology should be like that. Whenever there is like some kind of motion, camera turned on, and need permission from the security guards or watchroom that if this is authorized activity, please ignore that one. If not, then go and check. Monitor of controls, right? Internal and external auditors as well. So if something like is not working, of course you monitor that one. But nowadays, this is the age of information technology. Please stay up to date with the technology, right? So there are different hacks, to the technology. For example, thumb impression. So many people, they are using rubber kind of stuff, or different kind of stuff to have a wrong entry, wrong attendance. So you have different kind of updated versions of different technology systems. It's like that. Also, when the face recognition come earlier, so what happened, people use the photograph through your phones in front of camera, and it just make your login accessible. But now they have 3D scenes and raises to your 3D effect, so they know that it is a picture or it's a real face. So this kind of stuff. So the monetary control is like that. It should be available for internal auditor and external auditor. So what does it mean? So internal auditors are that who are auditing the company, who are company employees, who establish all these stuff to minimize fraud and other kind of stuff. So they are responsible for any kind of fraud or this kind of stuff internally, and they are on the payroll of company. External auditors are not on the payroll of company. So it's like that, they present the financial statement, they make the financial statement, and then company present it to external auditor for confirmation. So if I am an auditor, external auditor, they have degrees like CPA, CA, like chartered accountant. So if I am presented with this balance sheet, so can I just sign it and say that, oh, I trust this one, so you should also trust this one? No, I cannot sign. Why? Because I'm not sure whether this profit is 100% correct or not. Maybe this statement that I received is maybe include some fraud. So those external auditors, they receive the financial statements and they go to the company for verification. Okay, you mentioned that on cost of goods sold you have $4 million. So we just want to check the cost of goods sold books. They just take out the books and they try to match. They have different whole teams. Sometimes the teams work day and night for 7 days, a month or something. So you heard that, if some of your colleagues, your mother, your parents, your father is working in banks, so at the end of every month, they are coming late. Why? And the reason they told you that is because, the audit is going on, or it's a closing of the month or closing of the year is going on. So why? Because the external auditors came and they came unannounced. And they ask, okay, where is the receipts of this one? Where is, they randomly pick the amounts and the checks or all those stuff, and they want to, figure out or confirm or tally the figures from your books, your computers, and to the statements as well, so that there's no chance of having fraudulent activity over there. Right, guys? So the internal control procedures, it start, or you can say, we can have a hint here, we call this scalp. So number one, how to ensure that we have established good internal control. Number one, smart hiring practices. You hire ethical person, right? Background checks is there, training, competitive salaries, clear employee responsibilities. Remember, competitive salary is a major part in hiring smart person. Otherwise, he may leave the company, or he may develop some kind of opportunity or realization on the fraud triangle, or maybe he leave the company after receiving the training, and training is a huge cost, right? Separation of duties, here we go. So that person who is receiving cash and that person who is delivering the goods should be different departments or different person. Those who are receiving and those who are paying, right? They must have different or separate job roles, different two roles for the company.
Why?
So that the fraud can be minimized, right? For example, if marketing department is given the responsibility of sending the goods and taking the orders, then they might be doing some kind of fake sales. They sell $1 million, and in 1 week the customer return the goods or return the order. But on the balance sheet, sale happened for example, you know that the income statement is made at 31st of December. Sales, so they know that their targets are going down. So they call their friend, okay, just order $2 million from us. So on 29th of December, you receive an order, or maybe a confirmed order, 20% they already gave you advance. So remember the matching principle. So sales, sales of the goods, you receive the money or you receive the order on 29th of December. on $2 million. So $2 million worth of sale would be recorded on that year before 31st of December. But on 7th of January, the customer canceled the order. But your income statement already inflated by $2 million. See, they made a smart judgment, they made a smart move to increase their salaries or cooking the books or window dressing the books. So they maintain a very well income statement and mentioning that, okay, our sales are increasing. But right after 7 days or 10 days, goods are coming back to the company. Maybe the goods are not delivered, just paper handling changed, that's it. They said after 10 days we will be delivering the goods. And on the 9th day you receive that, okay, we don't need your goods, give us our 20% back. And you, because you have a special relationship, you send those 20% back. Goods are not touched or even not transferred, right? So that's why there must be a separation of duties. So those who receive the money, they are a different person. So they are responsible for receiving the cash. And those who are delivering the goods, maintaining the goods, they are different person. So that's why in big stores like Walmart and all the stuff, when you go to the when you go, you
The
purchase.
storage.
Yes, Florian.
When we go to the storage, is a different person to the cashier.
Exactly. And those who are, when you go to sale return, that is a different person, right? And for us, it looks very odd. Okay, I bought this good and I don't want it. Even after 3 minutes, you say, okay, I don't want to buy, want it, and you want to return that one. They would say that, go to that area. And you were very annoyed. Why? Because I just, purchased that one. You say, no, sale return department is different, right? In some cases, cashier is totally different. They make a goods, okay, your order is like this, okay, now go make a line over there, pay over there, and then give us the receipt, and then we are going to give you this bag of your whatsoever. So in that case, you are decreasing the chances of fraud. So you separate three key duties. Those who are handling the asset, they are different one, right? Those who are handling the asset, who are or watch guards who are watching the assets, they have a completely this role. They have nothing to do with cash and purchasing those new goods. No. Recording, those who are recording the cash, they are different personalities. And those who are receiving the cash, they have different department or personalities. So big companies do like this. Comparison and compliance, which is operating budgets. You make budgets and you want to stay with that budget. If budget is over, then you being called for explanation. If you make extra budget is